What if the thing stopping you from helping your kids or grandkids isn't actually a real obstacle, but just a misunderstanding of two words that sound scarier than they are? Today we're talking about gift taxes. And spoiler alert, for most families, the worry is way bigger than the actual risk. Hi, welcome to Policy Prepper, the channel where we take confusing insurance and retirement topics and explain them in plain, everyday English. No jargon, no sales pitch, just clear, honest information so you can feel confident about your decisions. Let's get into it. Let's start with the scenario a lot of people find themselves in. You want to help a child or grandchild, maybe with a down payment on a house, maybe with college tuition, maybe just with a financial head start in life. You've worked hard. You want to share that. That's a beautiful thing. But then, someone mentions the phrase gift tax, and suddenly you're second-guessing everything. You start wondering, am I going to get in trouble with the IRS? Is there a penalty? Do I need a lawyer? So you hesitate. Maybe you don't give at all, and that hesitation is almost always based on a misunderstanding. Here's the reality. The IRS does have rules around gifting, but those rules exist mainly to track large wealth transfers over a lifetime, not to penalize everyday families who want to help their loved ones. Understanding how the system works makes it a lot less intimidating. So, let's talk about the first key concept, the annual exclusion. Each year, you can give up to a certain amount to any one person, completely free of paperwork. No forms, no reporting, no interaction with the IRS whatsoever. In 2024, that limit is $18,000 per person. And that limit applies per recipient. So if you have 2 kids, you can give to each of them under that threshold in the same year. And if you're married, your spouse can do the same. The ability to combine gifts from both spouses is sometimes called gift splitting, and it can effectively double what you give without any paperwork. Now, what happens if you want to give more than the annual limit to one person in a single year? This is where people usually get nervous. You would need to file a form with the IRS. It's called Form 709, the gift tax return. But here's what's important to understand. Filing a form is not the same as owing taxes. Think of Form 709 as just letting the IRS know. It's informational. You're saying, hey, I gave more than the annual exclusion this year. The IRS notes it, and in the vast majority of cases, that's where the story ends. No bill arrives, no penalty, just a paper trail. Why? Because of the second key concept, the lifetime exemption. The IRS gives every person a very large lifetime limit on how much they can give away, during life or at death, before any actual gift or estate tax kicks in. In 2024, that lifetime exemption is over $13 million per person. So here's how it works in practice. When you give more than the annual exclusion in a single year, the extra amount gets counted against your lifetime limit. It doesn't trigger a tax bill right then and there. It simply reduces how much of that lifetime limit you have left. For most people, that limit will never run out. To put it simply, unless you are giving away a truly enormous amount of wealth over the course of your lifetime, you are almost certainly never going to owe a single dollar in gift tax. The system is designed to track the very wealthy, not to trip up the average retiree who wants to help a grandchild. Now, here's one of the most useful and underused strategies in the whole gifting playbook, and a lot of families don't know about it. Certain gifts are completely exempt from reporting requirements altogether, not just under the limit, completely outside the rules. The first exemption, direct tuition payments. If you write a check directly to a college or university, not to your grandchild, but to the school itself, that payment doesn't count toward any gift limit, no matter how large it is. It's completely outside the gift tax system. The second exemption, direct medical payments. If you pay a hospital or medical provider directly for someone's care, that also falls completely outside the gift tax rules. Again, the key is that the money goes directly to the institution, not to the individual first. This is a really powerful strategy for grandparents in particular. If a grandchild is in college, you can pay tuition directly to the school, potentially a very large amount, with zero gift tax paperwork required. And separately, you can still give that grandchild a gift under the annual exclusion in the same year. One thing worth mentioning, these rules can change. The lifetime exemption, in particular, is scheduled to drop significantly after 2025 unless Congress acts. If you've been thinking about larger gifts and want to take advantage of current rules, sooner rather than later may be worth considering with your financial advisor. Also worth noting, gift tax rules apply to the giver, not the receiver. If someone gives you money, you generally don't owe any tax on it. The potential tax obligation, if there ever is one, sits with the person doing the giving. So your kids or grandkids don't need to worry about receiving a gift. Let's do a quick recap before we wrap up. Number 1, you can give up to the annual exclusion per person per year with no paperwork at all. Number 2, giving more just means filing an informational form. It doesn't automatically mean you owe tax. Number 3, there's a massive lifetime exemption that most people never come close to using. Number 4, paying tuition or medical bills directly to the institution is completely outside the gift tax system. No limit, no forms. And number 5, the giver is responsible for any potential tax, not the receiver. These 5 things cover the vast majority of what most families ever need to know. Now, if your situation is more complex, maybe you're thinking about larger estate planning, or you have questions about how gifting interacts with Medicaid or other benefits, those are great conversations to have with a qualified financial planner or estate attorney who can look at your full picture. But for the everyday question of, can I help my kid without getting in trouble with the IRS? The answer, for most people, is a clear yes. The gift tax system is not designed to stop you from being generous with your family. It's designed to track the movement of very large fortunes over time. If you want to dig deeper, head over to policyprepper.com. We've got articles, tools, and a free AI assistant that can answer your specific questions about gifting, retirement income, life insurance, annuities, and a whole lot more in the same plain English you heard today. It's available anytime, no appointment needed. And if this video helped you feel a little more confident about gifting, or cleared up a worry you've been carrying around, please hit subscribe. We post new videos every week on topics just like this one, all designed to help you make smart, informed decisions for yourself and your family. We'll see you in the next one.